had a pattern. There is a nice rise in the stock price between October and the end of the year.
Holiday travel planning is well underway, and it can lead to a big seasonal boost for investors.
The stock's up 37% this year. That's probably double the performance of the S&P 500.
MarketBeat's Chris Markoch shares a list of 7 travel stocks investors should look at before the holidays.
They're projected to grow earnings at around 37.4% over the next 12 months. That just tells me that there's a lot more upside to this stock.
The stocks you might not have considered for a while, but could add a little holiday bonus to your portfolio. Let's dive in. Chris, so great to have you with us again, this time with another 7 stocks for us today, except these are all in the travel industry. It's a sector we haven't talked about much on the channel, so I'm excited to cover a lot of different areas of travel that maybe our viewers haven't thought about in a while. So first off, why think about travel stocks right now at the start of October?
Right. Well, the market's always forward thinking, Bridget. So the time that you're going to want to invest in these stocks to get the travel bump is now, because by the time the companies start realizing this revenue and earnings in their earnings reports, we're already going to be into 2026.
A really good point. When you say travel bump, we of course mean the holiday season. There's so much travel happening. Thanksgiving, Christmas season, a lot of that booking is happening right now. And so now is a time that a lot of these companies might see a little bit of boost. I think historically we've seen that run up happen from October to early December with a lot of travel stocks. So now's the time to be looking at them. Let's get to the first travel stock you have for us today.
Let's start with where a lot of consumers start when they're talking about travel, and that's with a company called Expedia. Everybody knows that. Ticker symbol is EXPE. So Expedia, along with Booking, are 2 of the primary players in this online travel space. The stock's up over 129% in the last 3 years. Stock price growth has slowed a little bit in 2025, but it's still up more than 16% for the year. And here's that thing again, it's up 24% in just the last 3 months. So it's already seen some benefit in the summer travel season, and now there's some question of will it carry over into the holidays? There's reason to think that it might. And the reason why I say that is, if you look at this, and investors can look at this on MarketBeat really easily on the landing page for all of these stocks, there's a line item that shows what analysts are projecting as far as earnings per share growth over the next 12 months. And in the case of Expedia, they're looking at earnings to grow by about 20% in the next 12 months. Now, look at where Expedia's forward earnings are, their price to earnings, their forward price to earnings. It's at 17 times. So that's a really great opportunity for investors to capitalize on that little bit of a discrepancy where analysts are projecting higher earnings growth than where the stock is currently trending as far as forward earnings. That looks like a great valuation pick to me, and I think that's why Expedia is the first choice on my list.
So interesting to see that forward-looking earnings expectations for this company. I want to talk about a couple of other stats on Expedia before we move on, and that's we're seeing a little pullback in the last 5 days.
Yeah.
Is it enough of a pullback for a buying opportunity? Because when you look at that pullback where the stock is right now versus what analysts are saying about the upside for this stock, I think that's where investors might be a little bit concerned here.
Yeah, I don't think it's something that they should really be that concerned about. Again, I think if you're looking forward, you're thinking about where do you think the stock's going to be maybe in 6 months. And so I think any dip that you get right now with Expedia is probably a good opportunity to buy into the stock.
A very good first pick, of course, covers all areas of travel. Let's get into the next area of travel you're talking about with your stock number 2.
The next 2 picks, we're going to focus specifically on the airlines. And the first one I'm going to talk about is Delta Airlines. This is kind of the stock that I would say, if investors only were going to invest in one airline, Delta would be my choice. The company just continues to deliver solid performance despite all of the noise that goes along in the airline industry. Is jet fuel up? Is jet fuel down? Are they having labor issues? Are they having this and that? And through it all, Delta just has continued to deliver. The company, like almost every other airline, withdrew their guidance earlier in the year because of the tariff concerns. They reinstituted that guidance in the last quarter. The stock's still down about 5, almost 6% for the year, but the stock is now trading about 19% below the consensus price target. It's received several bullish upgrades in the last month. JP Morgan just increased its price target to $85 from $72, so that's almost a 20% increase right there. And the stock's attractively valued at around 7 times earnings. So I think right now this is a good time if you're looking at the idea that you're likely to see a bump in airline traffic in the holiday season. Delta's a good play there.
I think with this stock and really this whole list of travel stock ideas today, I think retail investors who like growth are looking at this going, the stock hasn't done anything. When you have the
Right.
whole AI sector seeing 500% growth in a year or 200% growth in 3 months, I think that this is a very different sector to be looking at. Is it important for retail investors to be looking at different areas, or do you put all of your eggs in that AI basket, hoping for that 200% growth?
Certainly, I'm not gonna discourage any investors from investing in the AI bubble. That's and it is a bubble, but that doesn't mean it doesn't have further that it can expand. But here's the thing, it's always a good idea to diversify your portfolio across a wide variety of stocks. And certainly, Delta's one of those that's more of a contrarian pick right now because the entire airline industry has been slumping over the last couple of years as higher interest rates and inflation softening in consumer demand. But this is one of those picks that, again, trading about 19% below its consensus target. It's only trading at about 7 times forward earnings, and it's projected to have earnings growth of around 8, 9%. This is, to me, it just seems like this is the good opportunity to be getting into a stock like Delta. Delta also reinstated its dividend that it pulled in 2020, and now it's coming back with it. So you're even getting a little bit of a reward just for hanging with the stock.
Yeah, that dividend is a nice bonus for a lot of retail investors. If you're looking for more dividend growth stocks, make sure to check out our free premium report on marketbeat.com. It's on the 10 best high yield dividend stocks for this year. It's another list of names you might not see making the AI headlines this year, but they have all really led to solid portfolio growth for many investors through retirement. You can scan the QR code now or click the link we have for you right in the description of this video to get that free list of 10 high yield dividend stocks right now. All right, Chris. Well, you said if you could only buy one airline stock, you would
Right.
buy Delta, but you've got another airline stock to consider today, too.
I do, and this might be more of a trade than a long-term investment, but the company I'm looking at is Southwest Airlines, and here's why. So I just was mentioning that you had inflation and you've had interest rates, and that might be weighing on the consumer. Well, one thing that has actually been keeping the airline travel at least pretty steady, at least through 2024 and the first part of 2025, was that jet fuel costs were a lot lower because, as we've seen, the price of oil, even though the US is pumping at almost 100% capacity, the crude oil prices are staying down and they're in the 60s. They're showing no sign of really spiking anytime soon. That could change, especially if last month's interest rate move by the Fed was only the first in a series by the end of the year. The one move's not going to do that much, but if you have a series of moves, it could. Now, that brings me back to Southwest. One of the bull cases for Southwest is that they are a company that does a really good job at hedging their fuel costs. Now, when oil's down, when the price of oil is down, that doesn't matter that much. But when the price of jet fuel starts to rise, that's when a stock like Southwest Airlines can really shine. I'm thinking that you might see a spike in oil prices as we get towards the end of the year. Now, what happens when you have a spike in oil, in maybe jet fuel costs at the same time when travel demand is up? That to me seems like a really good calculation, and that's why you might want to consider Love stock. It's trading about 3.5%, I think, above its consensus price target, but I don't know if analysts and investors are totally factoring in the potential bump that they might get from that.
Really quick talk about I think Southwest had some company changes in the past few months anyways.
I think they did the thing with the seat, didn't they?
Yes, they changed the seat or the baggage guidelines. Have we seen that impact their stock at all? I know they were down quite a bit, like the rest of the market in April.
Yeah, I don't think it's impacted their stock that much yet, and I'm not saying it won't, but I think those things tend to be things that you're looking at that are gonna be measured over the long haul. But certainly, I think you're bringing up a good point, Bridget, in that if you're a consumer, and you have a choice of airlines, obviously, then that may be a reason why you would choose Southwest over perhaps another carriers, those little niceties that consumers can pick up on. And again, Southwest caters to that lower income consumer who is going to be looking for value wherever they can get it.
Very good. Well, an interesting third travel pick to
Sure.
consider. Let's move on to the fourth stock on your list of travel stocks.
So the stock I'm picking for this one, we're going to look at the hotel industry and we're going to look at Marriott International. Now, hotels are kind of falling in that same space as airlines. There's been some evidence that reservations are down for hotels. I'm not necessarily sure that we're seeing that in Marriott. The earnings performance has been pretty good. The stock's down by about 5% over the last 3 months, but the company held its own as far as earnings go. They had a slight beat on revenue, earnings came in line, and both of those numbers were higher than the year before. So we might be seeing a slowdown in the rate of growth, but it still seems like there's growth there. And Marriott is one of those companies. They have a really strong rewards program. They've got a large portfolio of brands at a lot of different price points. And it just seems like there was an organization called Travel West that's predicting that holiday spending on travel is supposed to go up about 1%, whereas a lot of other categories within holiday spending are supposed to see declines this year. So again, I'm not necessarily seeing a drop off in Marriott, and I think you could still get that bump in the holiday season. This is a rock solid company in terms of their balance sheet. It does pay at least a little bit of a dividend that looks very safe with only about a 30% payout ratio. So I'm liking Marriott in the hotel sector during this holiday season.
Yeah, I think one thing to look at with Marriott, what have we seen traditionally with this company or other hotel stocks over that holiday season? Is there evidence to show that that does sometimes show up in the stock price?
Marriott's had a pattern that investors can look at that's shown, especially over the last couple of years, there is a nice rise in the stock price between October and the end of the year. And I think that's because, again, if people are traveling and they're staying at hotels, Marriott's going to be a logical choice. And again, they've got a broad portfolio, appeals to a lot of different incomes. It appeals to a lot of travelers that like a different experience. They've got experiences that give travelers more of that B&B or Verbo or experience. And then they've got others that are just your classic, hotel rooms.
An interesting company in the hotel sector for sure. Let's move on to another area of travel that we haven't talked about yet. And it might not necessarily seem like traditional travel, but it's definitely going to see a boost with all of the travel over the holiday season.
Yeah, in terms of one that I think people might not immediately associate with holiday travel, but I think they should. It's Uber Technologies. And that, again, the ticker symbol there is Uber. Most people know that, UBER. The reason why I like the stock is because, quite frankly, ride sharing has now really completely disrupted the rental car space, especially in a lot of the major US markets. In some of the smaller areas, small town America, yeah, rental cars may still be the dominant form of transportation, but in a lot of the major metropolitan areas, it's now Uber, Lyft, all those things. And remember what we were talking about earlier with Expedia. You've got the same situation going on with Uber. They're trading at a forward price to earnings at around 38 times earnings. Their current price to earnings is around 16 times, but they're projected to grow earnings at around 37.4% over the next 12 months. That just tells me that there's a lot more upside to this stock than I think even the analysts are projecting. Right now, it's trading within about 10% of its target, which the consensus price is about 104. But I'm just thinking with that kind of earnings growth and where the PE is right now, I think the stock can go much higher. I've noticed that in the last month, it's gotten several price upgrades, and including Mizuho, who just reiterated their outperform rating and gave the stock a $130 price target. So they're obviously seeing something. Holiday demand won't have everything to do with it, but I can see holiday demand spiking for Uber.
Yeah, absolutely. There's gonna be a spike with just more travel in general over the holiday
Yes,
season. Uber will benefit from that, but you're absolutely right. This stock has way more factors going on than just that holiday travel boost. I
correct.
think important to talk about really quick is some of those new partnerships. I don't think it's hitting the stock yet, but in the next 12 months, those air taxi partnerships, some of the different areas that Uber will be working with, is that part of the reason we could see more growth here?
Right, I mean, you've got the air taxis, very logical connection with them. You've got autonomous driving. That's gonna be very significant because of, that goes right to the bottom line. If they can remove the human component from that, that's just gonna be very favorable for the company down the road as far as earnings growth. Uber's one I like for the long term anyway, but I especially like it because I see that little bit of a disparity right now between where the valuation of the stock is and where they think the earnings growth is gonna go.
All right, let's move on to that sixth company you have for us. And now we're kind of turning gears from just going to visit family over the holiday season to the entertainment that so many consumers are looking for over that Christmas break season.
This is one of the times of year when a lot of people are gonna take a cruise, and if you're looking in this space, there's a couple of names I think you can look at, but the one that I'm kinda zoning in on for this video is Royal Caribbean. Stocks delivered, my gosh, it's up over 765% in the last 3 years. Now, again, a lot of that is they were coming back from a massive, massive downturn in the stock in 2020 when the whole industry got shut down. But what investors should be looking at is the stock's up 37% this year. So, yes, they had a lot of there was a big catch-up trade going on, but that catch-up trade's still happening right now. The stock's up 37% this year. That's probably double the performance of the S&P 500. And the company is showing that it's got strong bookings into 2026. There may be some concern that they're getting a little weak, but that shouldn't have any impact on the holiday season. Stock's down over 12% in the last month, and I think that is a good time to say that's a good dip to buy. This is one that I would really look at. It's down below its consensus price target. Analysts are bullish. Several price targets are looking at this stock as going over $400 per share. So I like this stock in terms of it's that catch-up trade that's still going on. And I think that investors, when you're looking at what the company might report in earnings, not just this quarter, but that quarter following, I think RCL is a good stock to be in.
Yeah, that's a logical place to look over the holiday season. So much of that travel does happen over Christmas break. This next one, when kids are out of school at Thanksgiving or Christmas, you see a lot of these trips happening.
Yes, you do. And so the last stock we're closing with is Disney. Disney's a stock that it's had some rough times. The stock still has been trading in somewhat of a range over the past, I don't know, year or so. But when we're talking about travel stocks, you kind of can't leave Disney out of this. And the reason for that is because when you look at Disney's most recent earnings report, there's some other issues going on with the company in terms of some of its other business units. But what's really still carrying the ball for this company is the parks division. And you have a lot of people that say it's too expensive to go to the park. We don't want to go to the park. Again, it's too expensive. And yet you have a lot of people still going to the parks. And, I get it. I understand it. It is an expensive trip to go, but for a lot of families, especially those with young children, it's a magnet. It's going to continue to happen. And I think you're going to see, again, a very strong performance with the company. But again, for investors, you're not going to see those results this quarter when they report. It's going to be that next quarter. And that's why I think it's been a stock that's been kind of range bound this year, and right now it's towards the top of that range. But I think now is the time to get into the stock and then just see what it does over the holiday season.
Yeah, there's undoubtedly going to be plenty of trips still happening. I think with this one especially, but really all of these travel stocks that we just shared, it's going to be so telling to see how much the consumer confidence is out there, to see
Right.
how much travel does actually happen over the holiday season. If
Absolutely.
Disney reports, really good results in the parks over the holiday season, I think that says a lot about the economy moving forward. Are we seeing any kind of expectations or predictions on what we might see for the travel season this year?
Consumers are saying they might be pulling back on the volume of gifts that they're buying. Some of that might be going down. But again, that travel component is supposed to be up 1% year over year. And as you know, travel's been strong over the last several years. So even just saying travel is going to be basically breaking even and maybe even a little bit ahead of where it was, that just tells me as an investor, especially if you're an investor that's maybe just looking for some swing trades to go into next year, these travel stocks might be the ones that you want to look at. And I think there's a few of the stocks that are on this list that are definitely more longer term holds if you wanted to make them that way, like Uber and even Expedia.
Well, good. Chris, thank you so much for the change of pace today. It's not all technology. There are other stocks in the market to talk about, so it was fun to talk about travel today.
It was.
Let us know your thoughts in the comments, everyone. Are you interested in travel stocks? Do you think that there's money to be made in the short term or the long term on some of these stocks on this list? Let us know your thoughts in the comments. Thanks again for watching, everyone. As always, happy investing.